Hello, I'm Myooran Mahalingam from MLC, and joining me today is Charles de Vaulx, Chief Investment Officer from International Value Advisors. Charles, welcome.
Thank you. Great to be back.
Great to have you, Charles. Could you outline how you manage money at International Value Advisors?
Yes, at International Value Advisors, we are long-only investors. So we're not a hedge fund, we don't short securities, we don't use leverage. Yet our goals are unique because we try, if possible year after year, to deliver positive absolute returns, as opposed to returns that will be relative to a benchmark. So to accomplish that, we use a value strategy around the world, investing both in small companies, mid-sized companies, sometimes very large ones. We're willing at times to consider high-yield bonds, either corporate or sovereign, to try to achieve equity-type returns, 7, 8, 9, 10% per annum. We are willing at times to hold gold, either the mining shares or the gold ETF, with the view that more often than not, gold can be inversely correlated to stocks and bonds. Stocks and bonds may go down, gold may go up, and vice versa. And finally, if we don't like the valuation of most securities out there, if we struggle to find enough cheap securities, we don't mind letting the cash build up.
With markets hitting all-time highs over the past few years, where are you finding opportunities today?
It's been a struggle, which explains why we hold approximately 40% in cash, which is very high by our standards. You're right, because of central banks having very low interest rates around the world, stocks and bonds, most of them around the world trade at very elevated levels. So, but here and there, we have been able over the past year or two to find cheap names in Japan, in the healthcare area, in Europe, in the aerospace area, for instance, and a few financials. But it's very difficult.
You talked about central bank influence. How has geopolitics, for example, Brexit and Mr. Trump being elected as president, how has that influenced your portfolio?
Well, in fact, not that much, although both were viewed as a surprise by markets. Our view has been that for many years now, many decades, a lot of the goodies, if I may say so, have accrued to the owners of capital, to the shareholders, while wages have struggled to go up much, at least adjusted for inflation. As a result, corporate profit margins in many parts of the world are at very elevated levels. And so our belief is that those, some of the populist movements that can help explain Brexit or President Trump is basically means that it's another reason why corporate profit margins, we think, ultimately will go down.
Thank you, Charles. And you talk about corporate profit margins. Can you give an example of how you actually work with management to improve shareholder returns?
Well, in fact, we rarely do it. In fact, we have a bias towards owning companies that are family controlled, with the view that eating your own cooking can do good things. Family controlled companies can have a longer-term view, tend to be financially more cautious. Having said that, recently we still own a company, de Vaulx, where we were not pleased over the last 2 years with capital allocation, so the acquisitions they've made. So we've spoken to them and we asked if one of our employees, partners, could join their board, and which they've agreed to. And since then, it's been a year ago, roughly, a little less, the stock has more than doubled. So we're pleased with that.
IVA play a very important component in some of MLC's portfolios, particularly inflation plus. Can you give us an example of a stock in the portfolio that particularly excites you?
Yes, and I think inflation strikes me as more difficult to beat as an investor than deflation. Deflation is not a good thing, but all you have to worry about is counterparty risk. Inflation strikes me as trickier to beat as an investor. So one company which we think corresponds to, would give a good hedge against inflation is Bureau Veritas. It's a French-based, yet global company in the testing, inspection, and certification business. So it's a service business, it's not capital intensive, there's no plant, property and equipment, no receivables. So they inspect ships or plants around the world and certify that those plants meet certain norms, certain standards. And so they're able to generate streams of free cash flows that can grow over time, both because of global economic growth, but also because of inflation. So it's a wonderful business.
And the V in International Value Advisors means that you would have got it at a reasonable price.
Yes, now this is not a mediocre business, so we've had to pay up because it's such a high quality business, but we paid ultimately a very reasonable multiple, yes.
Charles de Vaulx, thank you very much indeed for chatting to us today.
Thank you, Myooran.